25 points higher for the Nifty, 75 for the Sensex.
We've got a rally of about 0.8% going on the Nifty right now.
Up and down, and right now at about 10,150.
Quite a bit of decline, and what's very clear is that it's the Bank Nifty which is leading the decline. The market is closing at the lowest point of the day, not even a point higher than the lowest point.
Markets do a U-turn after Dow futures and European indices fall. Nifty and Sensex slip over 1%. Nifty fails to hold on to 10,000.
Titan slips 3% on profit-taking despite a strong operational performance in the fourth quarter, reports a big beat on EBITDA and profit after tax.
Nifty Bank underperforms, falls over 2%. HDFC Bank and ICICI Bank lead the fall.
Pharma index gains the most, rallies 2%. DRL, Sun Pharma and Lupin soar to 52-week highs.
And the mid-cap index fares a little better than the big benchmarks, falls only 0.5%. However, exhibition stocks tank. PVR and Inox fall between 7 and 10% on reporting losses in the fourth quarter. Well, Dalal Street erased all the gains of the past two sessions. Hello and welcome to Markets Today. I'm Latha Venkatesh, with me my colleague Prasant Nair, and over the next 30 minutes we will wrap up all that happened in those 6 hours of trading in just 5 headlines. It was a rocky day, starting high and ending at the lowest point.
And doubly complicated, Latha, because we had that initial big spike, complete sell-off, and then back to the day's high, and then collapse. Okay. So, I mean,
twice over.
Twice over. So, torturous kind of day. If you're just trading very, very short term. It's a packed show as always. We bring you expert market opinion. Vallabh Bhansali, chairman of Unam Securities. You'll hear from him. The top-down fundamental view. Sushil Kedia, founder of Kedianomics, as always, identifying turning points in the market. Atul Suri of Marathon Trends is the other technical voice that you will hear on the show. In corporate voices, we will have PVR's Ajay Bijli and Zerodha's Nitin Kamath talking to us. We will get to all of that opinion in just a bit, but as always, let's wrap up the market itself. Latha.
Well, actually, the famous statement which Vallabh Bhansali gave us yesterday was what played out. Respect liquidity, but don't trust it. And that's what happened. European markets and the US markets have also been riding on a flood of liquidity, and today it turned out to be the day when the tide would flow back, only to re-emerge again perhaps, but for the day it was an ebb tide, and you saw first profit taking in Europe and in Dow futures, and it was particularly vicious in the Indian markets. Typically those stocks that ran up the most were the ones that saw a big fall, but defensives held up. That is Pharma and IT stocks. More importantly, Pharma, where the markets see a defense not only from the volatility of the markets, but also from the decline of the economy. It is anyway not hit by poverty. You buy Pharma stocks irrespective of prosperity or poverty, but all the more so because there is a health issue facing the country. And Pharma seems to be the safe harbor even for finance, not just for good health.
Oh, absolutely, Latha. So, here is just a look at what the market stands at today's close compared to the high today and yesterday's high as well. By the way, the market has made a lower top. I mean, the market got up to a level yesterday, and then it did not quite go up to that level, right? I mean, so. Not a positive kind of structure in the short term, but the graphics should come up on your screen. The Nifty, 264 points off the high today, and from yesterday's high, 301 points. The Bank Nifty, 916 points off the high today, and 1155 points from the high point yesterday. So that's just a snapshot view of things. In terms of weakness, where was weakness? There was nothing large, at least in the large cap space. Nifty stocks, but it was a case of most things being weak, and that led to that 130, 140 point cut. Wipro, Gale, ICICI Bank, all in the region of 3.5%. Tata Motors, BPCL, Titan were some of the other names, but it was a case of most things being down at the same time. Broader weakness will come up on your screen. So advanced decline, of course, on a day like today was skewed in favor of declines. Idea, 16% pullback, back at about 10 rupees. PVR, 6%, continues the pullback which started yesterday. Relaxo, Raymond, Inox was the other one. Aditya Birla Retail, AB Capital, Arvind were some of the others which actually came off quite a bit. The gains in names like RBL Bank, which continues to pull higher, but again off the highs. BHEL was very strong. GNFC, Adani Green, Advanced Enzymes, there were Sundaram Clayton, Avas Financiers and Credit Access, some of these smaller NBFC/MFI names which kind of stood out with decent gains and pretty large volumes as well. So that's a snapshot view of what happened. But we've pulled back, as I told you, 300 odd points over the last 2 days. Latha.
Okay, well, I'm sorry if I distracted you. I was just trying to point out that the market has failed to hold 10,100. It did hold 10,000, and that's important. A lot of people take a lot of strength in the fact that 10,000 has been held. It is 10,100 that's been given up. Okay, market opinion for you, and I referred to this earlier when we started the show. Vallabh Bhansali of Enam Securities warned us yesterday that you mustn't trust a liquidity rally. You must respect liquidity but not trust it. Sushil Kedia of Kedia Economics also gave us his outlook for the Nifty.
So while, you have to respect liquidity, but you shouldn't trust liquidity. It vanishes so quickly, and then, we know what happens. Earnings story is the one to look at. Until you see earnings, coming into some kind of reliability, you should be very cautious in the market. Don't look at the market on a daily basis. Look at the stories and look at the earnings growth. Maybe with lower interest rates, there is some justification for higher P multiples, but don't be tempted by liquidity-driven markets.
The world is suffering from two big risks. The one risk everybody's mind is pegged to, that the lows are not final and will go and collapse into those again and break them. That risk is real. You cannot rule that out. But before that, the risk that is going to hit this world, and which is what I'm more worried about, is a risk that is not being discounted, that this market is continuing to climb walls of worry, brick by brick, and the S&P 500 is leading it. If I'm trying to project it into India, right now, of course, through the day we did an important breakdown below 10,100. So maybe 9,700 or worst case 9,500 will go to. And for sobriety, I would say on the next rebound back up, Nifty will likely get back to say 10,600.
Okay, 9,700 to 10,600 kind of range is what what Sushil is talking about. By the way, we did not quite get to the 61.8% retracement. That was about 10,437 at yesterday's high. We were about 50 points short. And Sushil is saying the range is about 10,600 on the upper boundary. So there is some pullback after getting not quite there, but close to it. The second headline then, Titan fell close to 3% on profit taking despite a solid operational performance in the fourth quarter. The company saw a big beat on EBITDA and profit after tax. Mangalam is here to take us through the management commentary, the details of the numbers. Mangalam.
The important part was the commentary that came in the conference call. The first one, of course, was the fact that the company is targeting normalcy by the fourth quarter, and that was reassuring. Apart from that, there was encouraging trend as far as sales recovery is concerned, as the companies opened close to around 1,400 of their 1,800 overall stores, which include the likes of Tanishq, the watches stores, as well as the eyewear stores. So 1,400 stores in which they're open. They are seeing encouraging trends. Over and above all of that, it's during these unprecedented times that they believe there is a fair amount of opportunity for Titan to grow given the strength in its balance sheet. And they've also implemented a war on waste program, which is basically a cost savings initiative, which the company says will continue to help them as far as margins are concerned and the return ratios on their capital are concerned. They saw no revenues in April. They saw only about 10 to 15% worth normal revenues in the month of May, but this number has moved to around 30 to 40% in June so far as per their expectations. So the first quarter is a miss. The second quarter has seen a bit of a dip as per the management in terms of their expectations. They believe by fourth quarter there would be normalcy as average sales have returned to about 60% to pre-COVID levels. They say eventually the long-term trust of Tata and Titan will indeed stay around and help the company.
Mangalam, thanks very much for that. So Mangalam highlighting the important commentary out of Titan management. The third headline, and this is banks. Nifty Bank has underperformed the benchmarks and ended over 2% in the red. 1,100 points off on the Bank Nifty from yesterday's high. ICICI Bank, HDFC Bank led the fall today. I mean, this is economy facing, and it gets pushed up the fastest and it takes the knocks the first as well. Latha.
Oh, absolutely. What you call high beta in broker language. Typically, it means these stocks are the last to rise and they rise very rapidly because they have fallen back. And even after they catch up, when the profit taking comes, you see them lose also the most. And that's exactly last and least to rally, first and most to fall, is how a high beta stock is defined. And that's how the Nifty Bank has been behaving. The Nifty Bank's pain point has been HDFC Bank. Difficult to fathom why. It has been falling for some time now. It has a large unsecured retail portfolio, which could be salaried people who have taken a hit. It could be simply that investors are not willing to give 4 times book. That given the problem that banks will face, they're ready to give only 2 times book. So it's a global fall in banking stocks. But really, HDFC Bank is the pain point. There were some stories as well that HDFC may look to liquefy some of its assets, its holding in subsidiary companies. I mean, all this is adding, but this fall in HDFC Bank predates all this. And the surprise strong point was IndusInd Bank. This theory that promoters will be allowed to buy more is doing the rounds. And that's not just benefiting IndusInd Bank. RBL Bank got benefited, DCB Bank got benefited, as if there are promoters with sacks of money waiting to buy these shares. But for what it is worth, these mid-cap banks did well.
Okay, Latha, thanks very much for that. Well, let's hear out what Atul Suri of Marathon Trends has to say about the market, but specifically on the Nifty Bank. This is Atul Suri's call on the Nifty Bank.
Banking as a sector is something I'm really disappointed with, because we haven't really been able to take out that level of around 22,000, which it had hit earlier. So the chance that one of the lead sectors in India can be a bit of a laggard, we've already seen it in the last month or two, is very, very likely. So sectors change, themes change, trends change, and it's our job to be able to realign to it. So I personally think that banking is going to be under the cloud. I do see banking going ahead relatively underperforming relative to the market.
Okay. Well, moving on, working from home has given a lot of fence sitters a chance to dip their toes in the market. And what did my colleague Prashant do? Prashant has actually put together a lot of data about the retail frenzy that has gripped not just India. It's a feature that you can see in many countries in the world. He's just moved to the analyst desk. And here he has compiled the list of data from various countries on how retails are getting drawn into this trading frenzy. Prashant.
This is interesting data because, this kind of does explain the kind of euphoric sentiment readings that we are seeing, not just here, but around the world. I mean, actually not here, but specifically in markets like the US, etc. And this is retail participation as measured by different indicators, which I could put together. I mean, so look at this, right? This is the United States. I'm looking at 4 countries, the US, Japan, South Korea, and then finally I'll wrap this up with India. In the US, single lots as a percentage of overall activity is now at a record high. This is options market. So the percentage of single lots as a percentage of overall activity is at a record high. So small investors. The trade reporting facility, which is a facility used by brokers which execute trades largely on behalf of small investors, TRF as it is called, the volumes there as a percentage of the overall volumes are at new highs. Then you look at the third evidence, the Nasdaq composite volumes as compared to the NYSE and regional exchanges put together is basically gone, very, very high, is exploded, right? Again, an indication of the activity we are seeing on the coming in from the small guy, the retail guy out there. Okay, so this is the US. Now let's look at what's been happening in Japan. This is what the 5 leading online brokerages in Japan told the Financial Times. Basically, they've clocked over 500,000 new account openings in March and April. I mean, for a market like Japan, that is quite amazing. I mean, the numbers that we're talking about. Then you come to South Korea. This I pulled up from, what CLSA wrote, and the local sort of chap there at CLSA in South Korea wrote. They said that COVID correction has spurred an appetite for local stocks with retail investors snubbing foreign equities and other asset classes and satiating their hunger for returns. Basically, what the analyst in South Korea at CLSA is saying that all of the selling by local institutions and foreign institutions has been absorbed and the market has moved higher. Who's buying? It's retail. So that's South Korea. Let's come to India now. This is from the largest retail broker in India with 25 lakh customers, 9 lakh of whom are active. And they say that the number of accounts opened with Zerodha is up 300%. Post-COVID, basically April onwards, as compared to pre-COVID, which is pre-March. So, just some data points which kind of do go a long way to explain the frenzied moves we are seeing in some corners of the market. Like, for example, we saw that big move, 100% plus moves in a single day in the U. We have been seeing in the US in some of these junk names, so-called value names, etc. But that's not just limited to the US. We are seeing that kind of activity in many markets around the world. It would be foolish to look at these numbers and call a market top or anything or a market bottom. That is not the intention here. The intention is simply to take the retail activity and gauge where the sentiment lies. Is it euphoric? I mean, is it at a neutral kind of level, or is it a pessimistic? Right now, I think we are moving higher towards euphoria. Back to you.
Okay, well, we were moving ahead to euphoria, Prashant. Let us see if it lasts. Well, we actually spoke with Nitin Kamath, the founder and CEO of Zerodha, and he also said that although the number of transactions are up, the average value of transactions are down, indicating that down actually 20 to 25%, indicating that there is a lot of participation of smaller retailers.
I think this whole work from home has kind of enabled a lot of those fence sitters, people who had always been thinking of investing in the markets, but who didn't really, who probably didn't have enough time or had other distractions. So this whole work from home has probably enabled a lot of first-time investors to, get that bandwidth to sit and open an account. So we're in India as well. We are seeing a real big spurt in first-time investors to the market. The absolute number of trades have gone up significantly for us, but the value of transactions, with a lot of these first-timers coming in, the absolute value of the average value of transactions are down 20-25%.
All right, we have to take a break on that note, but we're going to come back. There's lots more that happened in the markets, and we will be back with you.
Here's to those who get out of bed, looking hopeful, looking ahead, like you, girl, in that dress so red. Long live bold. Ajio and over 2,000 fashion brands salute your spirit. Ajio.com.
An attractive investment option for all seasons. Government bonds, the must-have investment for your portfolio. Guaranteed by Government of India. Flexible investment period from 91 days to 30 years. Invest rupees 10,000 onwards. Holding in Demat account.
For more details, contact your SEBI-registered broker or log on to nscindia.com.
Issued in public interest by NSE.
To talk about riding through the storm and restarting India is the man himself, Mr. Uday Kotak.
Markets, when they are giving the values they are actually putting money on the line. My advice to companies in India, go ahead and take the capital to strengthen balance sheets. Monetization of deficit is primary buying of paper by RBI from the government. I do not think that is advisable. Current methodology where the RBI expands its balance sheet through OMOs is the appropriate way. What's the first alphabet for sunrise in Hindi? It is Uday.
What has been the impact of COVID on the MSME? What is the current outstanding?
It's a big amount. I don't have anything more to announce.
Keeping the middle seat vacant has not been an option for any airline anywhere in the world.
Given the steps to be taken, we're talking at least about a month for this scheme to be operationalized.
Yes, it will take at least that much of time.
PSU is the backbone of our industry, but they have to compete with the other players.
By June, the fall in exports will come down to about 15-20%.
Enjoy contactless banking from RBL Bank. instant account opening, WhatsApp banking, scan and pay. RBL Bank, Apno Ka Bank.
Welcome back. You're still with us here on Markets Today. Well, we've been running you through the top headlines, the opinion. We got through 3 of the top stories. Here's the 4th one. The 4th headline is the Pharma Index, which outperformed in trade today. Dr. Reddy's, Sun Pharma and Lupin ended at 52-week highs. I mean, the stocks were up anything between 1.5% to almost 4%. There were also brokerages who continued to sound the bullish call for the sector. My colleague Sonal is here with exactly that. Sonal, over to you.
Pharma sector did really well today. In fact, from the lows of 23rd March, the sector is up around 52%, and from 18th of May, it's up around 8%. And across the board, we have seen good moves coming in. Elara Securities, in a recent report, also said that it's more conducive to invest in the pharma space right now rather than financials. There has been a couple of news flow also surrounding the pharma sector. For instance, the Indian pharmaceutical market data was released, which showed that the growth decline has been around 8.5% versus 11% in the month gone by. So there is a gradual recovery that we are seeing. Apart from that, we also had FIO who told CNBC TV 18 yesterday that exports are improving in the pharmaceutical segment, whereas the other sectors are not doing so well. Also, there is a CLSA report on Sun Pharma today where they speak about the specialty segment for the company. They expect the EBITDA contribution to increase from 0 to 15% in FY22, and this they think will be the next growth driver for the company and will also improve the cash flows. Overall, they have a buy rating for the company with a target price of 560 rupees per share. So they are quite positive on the stock. Back to you.
Okay, thank you very much for that neat wrap of everything positive, everything that's going in favor of the pharma sector. Here's Atul Suri, the person we spoke with earlier, Atul Suri of Marathon Trends, and what he had to say about pharma companies.
Pharma was underweight in everybody's portfolio. So there's one very, very important thing for a sectorial bull market to happen is under ownership. And pharma was definitely under owned. We also had about a 5% weightage towards pharma. But what has changed is not just an event, but it's an habit. You know, you have to look that an event like this changes business models and changes consumption habits. And these habits last for years to come. And I think that the investment in healthcare, whether it's at a government level, institution level, individual level, is going to be top of the list. I mean, just look at the amount of people who walk, who are taking multivitamins. And I think this is not just going to go away in a week. People are really understanding or appreciating health as priority number one. And linked to that is pharma. So I think that pharma has the makings of a very large bull market.
Okay, I mean, pharma continues to be in a bull market. The 5th and the last headline today, the mid-cap index fell close to 0.5%, but fared better than, the bigger benchmarks. However, exhibition stocks, cinema exhibition stocks took a knock. PVR tanked close to 7%. It had a big move, all the way to about 1,300. It's back just under 1,100 now. It reported numbers, and I guess that gave a bit of a reality check. It was a weak set of as far as fourth quarter is concerned, and that at a time when the fourth quarter only contained about 7 days of lockdown. My colleague Nupur is here with the details. Nupur.
Well, thank you for that. PVR reported weak numbers on lower expectations. Revenue was down 23%, but EBITDA and margins are non-comparable on year-on-year basis considering change in accounting standard. But if you adjust for that, EBITDA was down 74% and margins at just 6.6% versus 19% same period last year. Company reported loss of around 74 crores, which includes deferred tax remeasurement of around 32 crores. But internals were also weak. F&B revenue was down 25%, ad revenue was down 22%. The weak performance was largely due to COVID-19 related disruption. Entire March was a washout for the company. In fact, FY21 is more critical considering Q1 of FY21 is also washout for the company in terms of revenues. But do remember, stock trades a slight premium when compared to its peer at 13 times FY22 price to book value.
Okay, thank you for that. All those numbers, Nupur. We actually caught up with Ajay Bijli, chairman, and Nitin Sood, the CFO of PVR. Here's what they had to say. They are, of course, expecting that screens will reopen in 30 to 45 days.
We're just hoping
that we do open shortly, maybe in a month or 45 days time. I don't know. It's very difficult for me to give any number to it just now because it's a state subject. Although Ministry of Home Affairs has given the guidelines, still every state has to take that call depending upon how their situation is as far as COVID-19 is concerned.
We are doing a lot of belt tightening. Our average fixed cost, we've tried to reduce that by almost 70 to 75% over what our normal levels of fixed cost are. Where we are already in discussion with all the landlords of our premises for complete waiver of rent during the lockdown period. In addition to that, all the fixed costs have been really cut down by and being kept to bare minimum, including large costs like employee costs, etc., where we've taken large cuts across the organization.
Well, it just wasn't PVR. Inox Leisure also fell 10% on a bad fourth quarter number. Nupur is here to take us through those numbers as well. Nupur.
Well, in line with expectation, Inox also reported weak numbers. Revenue was down 22%. EBITDA and margins are non-comparable due to change in accounting standard. But if you adjust for that, EBITDA was down 64% and margins at just 9.4% versus 20% same period last year. This time, company reported loss of around 82 crores, which include deferred tax remeasurement of around 69 crores. Definitely, numbers are weak, but this time, company's borrowing has gone up from 70 crores to 122 crores at the end of FY20. But do remember, stock trades a slight discount when compared to its peer at 13 times price to earning FY22 expected earnings.
Okay, so this one also is 13 times, is it? Okay. Thanks a lot, Nupur, for putting all those numbers on the table. And with that, we wrap up on Markets.
Absolutely. From all of us here, thank you very much for watching this edition of Markets Today. More comes up in just a bit.